How's it going, everybody? Welcome to the Doe Show. It is officially Wednesday. We're jamming here. Hey, what we're going to do is a real short class today. If you have any questions, I'll be happy to answer them at the end. I'm going to take some bullets for this class, and I understand that, but I promise today, based on the thumbnail that you saw, I promise to take the advisor hat, take the salesman hat off. I want to talk just about what I see from people actually doing things with index funds, because you get the benefit of working with a lot of people. I get the benefit of talking to so many people, seeing their accounts move, seeing the emotions they go through, and you start to pick up on little things here and there. And there are a lot of great things about index funds, but it's usually the human that's the problem, not the index fund. So I won't be bashing on index funds today, but I do want to help you fine-tune a little bit should you decide that that's the way you want to go. We're financial advisors here, so usually this show is based on something financial that we can help you with to improve your finances, your investments, or anything that touches your dough. So let's get started. There's a million ways to invest, right? There is no wrong way to invest unless you're investing blindly. So if it's a retirement investment and you start, let's say it's a Roth IRA, and you just start putting money into it, well, kind of like shame on you, right? You should know how much you should be putting in there. You should know what your goal is. So one of the things we do is when customers sign up, they start putting money in their accounts, we get right to them and say, wait a minute, what's your number? Right? So you'll get an email that says, what's your number? Do you know why you're investing? You know, don't just invest randomly. We're happy to help you invest, but let's figure out what you need to invest for. So the only wrong way to invest is blindly. The problem is those people that love index funds think that that's the only way to invest, and their focus may be a little off. So while index fund investing works, certainly you can pick an index or multiple indices, I would suggest, you got to know it's not the only way to invest. And so it's kind of like, the argument is kind of like, remember back in the day, I don't know how old you guys are, but people would say a Chevy. Man, Chevy, that's your car right there. You know, you gotta stick with a Chevy. And somebody would come along and be like, nuh-uh, Ford is the way to go. And they would just kind of duke it out verbally, you know, about which car is better. And then somewhere along the way, someone came along and said, no, man, Nissan, Honda, that's where it's at. And it just totally screwed up the whole argument, you know? So people get so dedicated to one way of doing things that they won't open their minds and see what else is available. So know that investing in index funds is perfectly fine. Nobody is going to rag on you for doing it, but you still need to invest for your number. You need to invest in the one that makes the most sense for you. So totally cool if you want to do that. Now, if your goal is performance, right? I'll ask the question all the time. People call and they say, I've got, you know, this index fund, this index fund. We use a lot of index funds ourselves in our investments, but we're not, you know, only based on, we'd like stocks, exchange traded funds, and we do have some index funds. But someone will say, I'm invested in whatever index fund. And I go, great, why? And they can't answer the question. They go, well, I read a book. Tony Robbins, I read a book, said to do this, or Warren Buffett says to do this all the time, and I go, that's great, but those two people are filthy rich. So what about you? You're investing so you can get to some goal. Is that one product the best fit for you? So first issue that I see with people is their focus. What are they focused on? They're focused on the lowest possible cost, and they're focused on the easiest possible way to invest. Totally cool. I'm not going to argue with you. I'm going to say, does that fit your goal though? Is the index fund you've chosen the right one? If you say, I bought the S&P 500 because historically it does this or that and beats everybody, and you just can't beat the S&P 500, that's usually the end of our conversation, because those are like the Ford people that won't accept that there could be a better car out there. So that's okay. However, if you tell me I'm investing in the S&P 500 index fund because I want performance, I can count on performance and nobody can beat the S&P 500, you're instantly wrong. I can prove that you're instantly wrong, and I've done a lot of great videos to show you that there are mutual funds that beat the S&P 500. There's no magic about it. There are exchange traded funds that beat the S&P 500. There are other indices that beat the S&P 500. So it just shows that those people follow the herd and they don't understand what really investing is and what's kind of worse is they don't have a number. They don't know why they're investing. They're just doing it because they were told to do it. So that's the first thing. Just have your focus down. If you're going to choose an index fund and you're going to work with that, why are you choosing the one you're choosing, right? What is the main focus? What's the goal of that? And then number two, I want you to know that it is still emotional. So a lot of people go, you just buy an index fund, you set it and forget it. That's been easy for the last few years, but it does get emotional. The markets will fall. The economy will get weak at some point throughout your life. You will have to suffer a down move. That's one thing that keeps me up every night. That's why I spent so much money on towels that I send out to customers, because I worry about the emotion of our investors. I want them to have the stats to understand what it means when the markets fall. So I worry about that quite frequently, but just know that it will be emotional. And that's a problem because February, go back and look at the stock market in February. That was an abrupt move to the downside. I don't know anybody that said, oh, saw that coming, we made $1 million off of it. That's not the case. Most of us experienced a decline in our portfolios. However, I got more calls during that time period, and Jazz Wealth as a company opened more accounts because people got emotional. And it's understandable. I mean, we're not going to get rid of your emotion. But what happened is people were investing in index funds, and the markets just fell. Actually, if you go back a couple years, there's a big company out there. I won't mention their name. You guys probably know who it is. There's a big company. The markets fell so fast that the company told their customers, you're not allowed to trade. We are locking everybody's accounts down because you're all trying to sell at the same point. All your index funds, all your exchange traded funds. Customers were trying to close those products so fast that the company stopped. They shut down for the day. They're still in business today. It's a very, very well-known large company. But they stopped everybody because the emotion got out of control. Now, I kind of agree with what they did there, although many, many people were super pissed that they couldn't sell their investments. They were happy after it recovered, of course. So the company took the bullets in the short term to help their customers in the long term. I would actually side with them on that. So know that it's going to get emotional. Don't bail on your investments. Whether you're investing with us and you have some index funds, or you're investing yourself and you bought something that you like. Maybe you did buy the S&P 600, I see people posting there. Or maybe you bought the NASDAQ and you like that. Or you're a small cap guy and so you went to the Russell 2000. Whatever you bought, whatever index you're focused on, just know it's going to get rocky. Don't worry about it. Maybe keep this video somewhere so you can hear me say, don't worry about it. It's fine. There are statistics, and we've done all those statistics for our customers. Now, the last one is, when you choose index funds, please ask the question, which ones do I choose? Don't read a book and then just go buy whatever one comes up in your first Google search. This is your money we're talking about. You are investing for a long period of time. And remember, I always say time is king, not cash, when it comes to investing. Because if you get to the end of your investment time period and you didn't have your number, you didn't know how much you should have invested, and you didn't have a goal, then when you get there, there's nothing we can do. You can't go back in time. And it's one of the tougher parts of my job is to talk with someone who's very close to retirement and say, you didn't do it. You don't have enough. I don't have the answer investment-wise because you didn't save enough. You started too late. You didn't save enough money. And they go, I've been contributing to this for 40 years. And you go, yeah, but nobody ever told you you needed to contribute $100 more and then, raise it by so much a year or whatever. That's so hard. And but if you can tell I'm a little down today, that's because I've had to do that all day. And it really bothers me, right? Because it's so simple to say, fine, if you want to use an index fund, just know what your number is. So our goal as a company, we're not going to just put you in index funds. Our goal is to say, what's your number? Here's what we have investment-wise, everything that everybody else has. We're not magic. I never claim to be some great investor that beats the market. We invest for speed. And if it makes sense for you to invest in a certain way, we're going to do it for you. But that's the easy part. The hard part is figuring out how much do you have to put in, what's the goal, what is it? And that's what we do. We'll totally work that out for you. So definitely something to consider there. Just keep in mind, there are a million ways to invest, and whether you find success in buying certain stocks or using fundamentals or technical analysis or short-term trading, wherever you find success is fine to generate the returns. Now, how much do you need to get to your final goal? I'm not going to knock anybody. I seriously have taught thousands of people all over the world how to trade, how to short-term trade. And we always said the only wrong way to trade is the way that loses money. If you want to do one thing this way or you want to do it this way, we don't care as long as you make a profit. Well, when it comes to retirement investing, the wrong way to invest is blindly, without a goal, without a number, right? So don't just throw away so much money every month into an account in your 401k, in your Roth IRAs, whatever they may be, and just hope for the best. So that's my sort of soft video on index funds. I don't mean to bash them in any way. They're certainly acceptable vehicle to use, but it's how you use them. It's the money that you put towards them that makes all the difference, right? So understand where that's at. Ramus is saying, don't most ETFs track some sort of index? There's a lot of them. Yeah, there's a lot of index ETFs, and it doesn't have to be the S&P. It could be the dollar index. It could be emerging markets. It could be anything, really. They usually track some kind of index, and if there isn't an index available, it's usually going to track futures or some index that's been created. So a lot of the, I don't know, if you look up like the emerging markets ETFs, they're not tracking the S&P per se. They're tracking another index that was also created by man to just have a benchmark. That's it. Every investment usually has a benchmark put behind it. So, for example, if it's gold, then it's just tracking the price of gold to some fraction of an amount. But yeah, there's a lot of index ETFs out there. Great investment on the towels. We should have another box coming here soon because I said, well, you know what? The markets are doing really well right now. Let's order another box of towels. So when it falls again, anyone that didn't get a towel can certainly have one. If you're one of our customers and you want one, just send me an email. I'm happy to get my daughter to fold it up and put it in a thing for you. She does all that at home each night. Cool. A little late, Elliot. That's all right. You can't make it every day. One of our regular viewers there. I appreciate it. Brendan, still trying to get to parents. Hey, like I said, you're the opposite. Usually the parents call me and say, call my son, call my daughter and tell him to invest. And I go, I'm happy to call him, but you know, you can't force them to do anything. Brendan's a rare one. He's trying to get his parents to go back into the game that he's playing there. So cool. Yeah, that's cool. Hey, by the way, we'll talk about it on the closing beat later today. Big changes to our portfolios and mainly the allocation. If you look on our website now, we have listed the portfolios. The actual performance and everything is getting designed and set up. But I am under the strong belief that we need to start thinking about where the market is at. I'm not saying the markets are going to fall or crash or anything, but currently a lot of our customers are invested like this. I want to invest them like this, right? And that's the easiest way to explain it. You're invested in a very focused way, which is still diversified, but now I want to diversify wide, keeping the same speed. And so we've already started doing that for some of your accounts. I will need you to let me know you want to do that going forward, but tomorrow night, we're going to do a quick class for our customers to explain all of what's going on, the new allocations, and see if it's something that you agree with. If you're a little nervous that the markets are starting to wiggle around a little too much and you want to go wider to be even more diversified, remember there's no cost for that, right? We can have 300 plus positions all over everything. As long as we're moving at the speed we told you we'd move at, then I'm cool with that. So I'm going to wrap it up there. I appreciate you watching. I look forward to the person who just looks at the thumbnail and then bashes me in the comments section. I will leave them alone. I'll be nice, I promise. But enjoy the rest of your day. Come back at 5 o'clock if you would. We'll do our stock market update. We just go over the good, the bad, and the ugly. We're not active traders, but we do like to keep you posted on how things are going, and we'll talk to you then. Enjoy.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.
Hey, wait! Before you go watch one of our other great videos? Have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.